I don't think we'll have a bimetallic monetary system. And even Judy said that to me as well. I don't think we will. I don't think you'll see people trading silver to buy candy bars at the store. But I do believe that it has a role as a monetary asset in a dollar system that is devaluing. Gold will have a monetary aspect to it, whether it be with the BRICS nations in their settlement system or backing the treasury. As Judy says, but look at these states that are saying gold and silver are legal tender. Now, if I had to guess, how could gold and silver reintegrate into a monetary bimetallic system? I think the state of Texas has a good plan where you take your gold and you take your silver, if it's American made, and you bring it to the Texas Bullion Depository. This is where they're going, I believe. And they will check it in. Okay, Michelle dropped off 400 gold eagles and 10,000 silver eagles. And bang, they give you a credit card that says, this is now yours, free to spend at any establishment, and it will just be deducted out of your inventory. This is how you take gold and silver in the 21st century and use it as legal tender rather than going door to door. So could it become part monetary? Abso-freaking-lutely. But I think it will be in a manner like that, like Glint, right? Where you can take your Glint card and spend it. But I think there will be states like Texas, maybe like Florida, like Oklahoma, like Arkansas, that will say, put your money into a state-sponsored vault, get an accounting, a real-time accounting and auditing, and use it as your form of money. And I could see that, absolutely.
The conversation around silver as a monetary asset is getting louder, but Andy makes an important distinction. We're not heading back to a traditional bimetallic system where you walk into a store and spend silver coins. That era is gone. However, and this is the key, silver can still regain a monetary role in a modern, digital way, especially as the dollar continues to devalue. Gold is already being positioned as a monetary anchor by countries like those in the BRICS alliance, and as Judy Shelton has argued, even the U.S. Treasury could eventually move toward gold-backed mechanisms. Silver, meanwhile, could follow alongside gold in a parallel support role. Andy points to a very realistic model, the Texas Bullion Depository, where individuals can deposit physical gold and silver and receive a digital balance, essentially a debit card backed by their metal holdings. Instead of using coins, your transactions simply deduct ounces from your vault inventory. This bridges the old world of hard money with the digital economy. If more states adopt this model, Texas, Florida, Oklahoma, Arkansas, silver could absolutely become a usable monetary asset again. Not by carrying coins in your pocket, but through secure, state-backed vaults and digital spending systems similar to Glint. So the bottom line? Silver and gold aren't coming back as coins in your hand. But they are coming back as money you can swipe, spend, and store, in a system built to survive dollar devaluation.
I think anything's possible. Look, just the cup and handle formation would tell you that $96 would be the next target. You take the top of the cup, 45-year cup and handle, double cup and handle formation. The bottom of the cup was $4. The difference between the two is 46. Added to the top, which has been broken through, the next target is 96. But where is there resistance in a market that has none above this price level? Where is real price discovery? And you're right. I mean, if you took gold right now, let's see if I can look right here and see what the price of gold is at the moment. If we took gold right now at 41.40 and we divided it by 42, which would be roughly the average price of the last 100 years, and this is not even, talking about your inflation adjusted price. But if you took that and divided it by 42, right now, silver should be at $100 an ounce right now, just based upon its 200-year average. But it's coming out of the ground 6 times higher than that. So is it possible $600 could really be a number? I don't know. That would meet the geologic ratio. So I think silver will go higher than people think possible, because you now have an environment where I think it will be very difficult for the West to continue, especially with the Basel III regulations about physical metal versus unencumbered or encumbered futures contracts, to hold it down at these levels when there's so much physical demand. So is $200 realistic? Absolutely it is. And quite frankly, if you take 41.40 and you divide it by 7, which is what Keith Neumeyer will tell you it's coming out of the ground at, The geologic ratio right now between gold and silver is $591. Now, is that insane? Maybe. Is it crazy? Sure. Could it happen? Why not? At some point, don't these two numbers need to align themselves in an asset that is now being reclassified a critical mineral, in an asset where some of the most powerful nations on the planet are buying it using these subsidized prices? And the thing of it is that in an environment where everything has exploded in value, everything, and we've talked about how when my dad graduated college in '63 and married my mom, that's $6,000 a year. He and my mother could live comfortably together for a year on $6,000. Really? Or a brand new Corvette in 1973 was under $8,000 and now it's 120. Really? I can give you a million examples where the price of inflation is exceeding. Look at the price of a home in 2005, 20 years ago, was $240 or $240,000 an ounce, or $240,000 rather.
Silver just broke above $52, $53, but even that is far below its real inflation-adjusted high near $200 from 1980, meaning silver is still massively undervalued. Technically, the long-term cup and handle breakout points to a next target around $96, and since there's no historical resistance above current levels, price discovery can get wild. Fundamentals are also lining up: huge physical demand, structural shortages, and major institutions telling investors to move from dollars into hard assets. So yes, hitting or even surpassing the inflation-adjusted high is very possible in this cycle. Silver has room to run.
Going into the central bank coffers is not being reported to the IMF. And if the metal is not 999 pure, that doesn't have to be reported. Do you think that's why China's buying doré and concentrate? I wonder, perhaps. And how about Russia being the first bank to acknowledge it, but Saudi Arabia buying tons of it, and India buying between 500 and 600 million ounces over the last 6 or 7 years, and now it's a critical mineral here. I would argue that they are buying it. They're just not telling us that they're buying it. And this is why you're seeing the lowest float ever in the history of the LBMA, because all of these countries have been quietly doing just that. And if things were as important and strategic and critical as many of these nations, including our own government, say they are, well, then you don't want to be open and forthright about what your intentions are. I would say it's already happening. It's just not being broadcast the way that the London Times would like it to be.
What's interesting here is the growing evidence that central banks are already buying silver, just not publicly. Much of the metal entering official vaults isn't reported because it doesn't meet the 999 purity standard, meaning countries can accumulate quietly without notifying the IMF. China buying doré bars, Russia openly acknowledging silver reserves, Saudi Arabia and India stacking hundreds of millions of ounces, it all points to the same thing: a silent global accumulation trend. And with the LBMA showing the lowest available float in its history, the numbers back it up. This is classic strategic misdirection. Big players don't broadcast their moves, they hide them so they can load up before the world catches on. And while mainstream outlets push the narrative that central banks don't buy silver, the reality looks like the exact opposite. If anything, the smart money is positioning early, and the public will only see it once the price action makes the truth impossible to ignore.